Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April 17th. New York Empire State Manufacturing Index came way hotter than expected, 10.8 coming from minus 24.6, and the consensus was minus 18. So what does it mean? Well, they are manufacturing a lot. Housing market 45, almost as expected. At this, oh boy, I think this caused a lot of bearish sentiment today. But if we're moving to the charts, we have to take a look to some earnings pre-market. Charles Schwab shares are right now, I think it's like 1.73%, pulling back a bit, but they posted a profit of 93 cents per share, beating the 90% per share and with a revenue of 5.12 billion. So, well, the brokerage has been under pressure since the collapse of SRB, as investors feared that the company could suffer similar fate, but looks like it is not. Another one is not an earnings, but is news. Shares of Google slid 4% because looks like Samsung is discussing uses Microsoft Bing's powered by ChatGPT as the default search engine on its devices given its recent AI technologies. So this would cost around 3 billion in average revenue as at stake at Google, and Google is quite feeling the pain. We will be watching that later on. And last, I think it was MT Bank, regional bank, jumped 3% after posted adjusted earnings of 4.09 versus the forecast of 3.99, revenue of 2.41 billion, topping estimates of 2.38 billion. So last thing, Apple launches its savings account with 4.15% interest rates. The only thing that they need to do, the client, the consumer, is just to have an Apple Card reward program that offers up to 3% back on purchases, and users can change whether their daily cash is deposited at any time and can also add funds from their bank account to bid on their earnings. That is really good, I would say. And it's showing signs of strong support from Apple and strength on its earnings, because supporting 4.50% interest rates for Apple Card savings is just really good. So let's jump into the chart and let's start showing. This is the Nasdaq futures. This was Friday's big move into the close. That was really surprising. And as always, I like to draw support around levels. It was like here around the 30-minute chart. So we have this level of support and we have this level of support at end of day, low of day closure 30-minute candle on Friday. If we check the 1-minute chart, overnight today was really choppy, and I think that was the precursor of today's price action. We went up, then down, then up, then down, and since then we have been doing at this descending triangle, and oh boy, at market open, this was a nasty rejection, nasty rejection, nasty rejection. The high of day is still there, 13,200. We broke low of day here below this rejection of the 30-minute chart support on Friday, and since then we are trying to build. I would say this is a bear flag. Be careful with that. Be careful with this, because I think this is going to continue lower. Let's see what happens. But the thing is that look at this choppiness. I think a lot of people is just waiting for earnings this week. They are not willing to bet on anything bigger on the daily. This is the daily on the futures. This big red bullish candle, engulfing bullish candle, says a lot of support, and I think we're still on range, but this 13,255 last week high is going to be key pivotal this week on earnings. Because crude oil is just pulling back a bit. I think this is a bull flag. I think we are going to continue higher as long as China shows strong demand on crude oil. I think crude oil price is going to be higher. Crude oil market is quite interesting, and also gold. Gold is continuing to the downside after the rejection on Friday, and gold being this bearish, being this red, shows that dollar is going to be good. So it's just a matter of cash or some gold into the long term for big players. Right now, it depends on the recession fears. And right now, given that 85% of investors and analysts are saying that 25 basis points is going to be the next hike on May, I think gold is no longer the good trade it was. It's still bullish, but given that there's still potential for interest rate hikes, I think people are going again to the dollar of this beautiful support at 100 at parity. This is due to this market structure change on the yields. This is the 2-year yield that is basically breaking out to the upside, and also the 10-year. Look at this beautiful breakout that are showing that interest rates futures on December is 4.66, up 2% today. And this shows that market's expectations were really, really wrong. This trend and this pressure onto this ascending triangle and now breaking out is showing that bonds market were in the wrong, saying that Fed will most probably be cutting interest rates this year. They are more and more not liking that approach, and they are correcting themselves, going higher and higher on December. So right now, September is 5%. So remember, right now we have 475. With the 25 basis points in May, we are going to reach 5% most probably terminal rate. And until September, this is already priced in. What is still causing a lot of debate is on December, if we are going to see from September to December any interest rates cuts. I've been saying since months ago that there's no way we are going to cut. Fed most probably will not take the risk of start cutting before inflation is really showing signs of really cool down. And I don't think this year we are going to see any cuts. And this is what more and more bonds market are starting to more or less like it and pricing that in. Google was the bad guy today, minus 3.26% after the news that we were mentioning earlier regarding Samsung not liking their AI progress and liking more Microsoft Bing's ChatGPT powered. And Charles Schwab right now, look at this dip. And into the open, people bought the dip like crazy. Right now in the green, and MTV 2.28, the same thing. Into the open and then right back up. This is basically the opposite of what we're seeing on Nasdaq. We were consolidating, we start dropping, and this doesn't look really good. Be careful with that, because this looks like a bear flag. 30-minute chart still showing red after red candle, so they already have it really clear. But be careful here, guys. Be really careful. This can end on another leg down, and we can reach 13,070. And this 13,068 on the Nasdaq was last week really pivotal. On the daily was this level, And after this doji, I mean, be really careful because pressure to the downside might continue after this resolves lower. This is, I think this is a really clear bear flag. So be careful with that. We analyzed all the markets, really try to take some approach on different markets. Crude oil, what is doing crude oil, selling on, demand destruction. Gold is feeling the pressure on yields, and that's why dollar is being pushed up, and earnings this week. All these convergences and divergences really push your trading and your maturity on trading and reading the markets really, they push you really high. And I think learning these kind of things are key to understand what kind of markets exist and how do they react, instead of going with the FOMO and with the fear and with the chop. You just can have an overall understanding of everything. In this channel and other channels, I always try to learn and also to teach you and explain what's my understanding on these different markets. So please support the channel, please follow the channel, because this year is going to be really, really nice to really understand what kind of market do we have to see in order to trade the recession that is coming. So I hope you found these videos and this channel useful, and please continue to support. I'm very grateful for that. And that's all from my side. Remember that I upload every single day videos for market forecast, market updates, and market recaps. I appreciate your time as always. Please give it a like, please subscribe to the channel, and remember that discipline and risk management are key for success. There's still plenty of time ahead. Look what happened on Friday. We just consolidated with a double bottom after lunch, and then we spiked up. Will it happen again today? I don't think so. I don't know, but my approach is just risk management. Be careful with this and watch out for this bear flag resolution to the downside and continuation. This looks really a bull trap. So enjoy the rest of the day, stay safe everyone, and see you tomorrow.